Who are you going to call when your loan officer retires, disappears, or is on vacation? Too often, we put all of our eggs in one basket. In this basket, the mortgage industry quietly lost 24,600 active loan originators from 25 going into 2026. More than 224,000 loan originators closed at least one loan in 2025. But after the NMLS renewal period in 2026, barely 200,306 loan originators renewed their license. So we lost almost 24,600 loan originators, nearly 11% of the people who produced at least one loan the year before. And in my opinion, after 30 years of being in business, the last 3 years has been a hard stretch. But this is not just an industry story. It's also a homeowner story, a realtor story, and it's a question every borrower should ask. If your loan officer retires, changes companies, stops taking loans, leaves the business, who's your backup? Let's break this down. RETR Mortgage Data Company that tracks loan originator activity reported 224,902 loan officers closed one loan in 2025. After the renewal period, only 2,306 active originators renewed their license. Difference of 24,596 loan originators did not renew their license. We quietly lost those. And that figure is real, and the way we talk about it matters. I would not say every one of those loan officers permanently left the mortgage profession. Some may have retired, some may have changed companies, some may have moved into operations. Maybe they're selling real estate or insurance, doing property management or another role. Others may have kept their license but just stopped originating actively. But the conclusion is 11% of the loan originators, the potential people that you could get a mortgage from, are no longer doing that business. It's meaningful turnover in the mortgage industry. If you've been around the mortgage lending world for a while, you understand why this happened. Essentially, the low rates of 2021, and rates then rose very quickly. Refinances dropped. I actually had a stretch of about 18 months where I didn't even do a refinance. Purchase transactions become harder because homes were more expensive, inventories tight, negotiations, multiple contract offers. Clients get frustrated that they can't win, and they just do not buy. Some of these are just some of the major challenges. At the same time, loan officers had to deal with lower volume, rising lead costs, expensive technology, compressed margins, borrowers who understandably needed more education and more support to be able to buy. This was not an easy market where you could just simply quote a rate, wait for the loans to fall into your lap. It became a market where you had to know how to solve problems. You had to know how to generate purchase business. You had to know your facts and figures to be able to educate consumers on affordability. You had to understand loan programs. You had to communicate with realtors. You had to follow up, and you had to manage both realtor emotions and client emotions, sellers' emotions. You had to help people make major financial decisions in this complicated market. And many good, experienced loan officers were just done. From a 30-year perspective, I've been in this business. I personally love this business. I have seen difficult markets. I have seen rate shocks. I've seen financial markets. I was actually in New York with my dad the day that Lehman Brothers lights went out on that Sunday. We were checking out one of the last games in the old Yankee Stadium. It was a pretty cool weekend. One I'll always remember for sure. Lights were on one day, lights off the next. I've seen refinance booms and I've seen purchase market battles, but in these last 3 years, it's been just a little bit different. It's been long, it's been slow, and it's an extensive grind on the individual. The problem was not one bad month, it's not one bad quarter, it's a few bad years of reduced opportunity and expenses. How did I overcome that and why am I still in business today? It's simple. 20 years ago, I have a boutique insurance agency, KSA insurance agency. I also have my real estate license, and I also 90% of my business is still being a mortgage broker. But in that environment, the ability to know each of those jobs, insurance, real estate, mortgage, has enabled me to not only weather the storm, but actually prosper in that storm by educating some young agents that got into the business and needed some hand-holding to get some of their deals done. So this kind of environment actually brings out the best in a lot of mortgage professionals. If you're still standing today, we've been weather tested. We've been battle tested as a Marine. I'm definitely as a veteran battle tested. 40% of my business is doing VA loans. And I'll tell you, in this tight market, the VA loan is absolutely the best loan. I don't hear any realtors saying, oh, I want you to go conventional. I don't want you using your VA loan. They'll take somebody with a heartbeat that has 100% financing every single day of the week. And for consumers, that can actually be a positive, especially in this market with the VA loan. 100% financing, and you can have 4% seller concessions and actually have them, what a lot of people don't know, you can actually have them pay off additional debts. Closing costs and points don't go into that 4%, so you can actually get more than 4% if you didn't know that seller concession. So if you're working with someone who's knowledgeable in a VA loan and a knowledgeable realtor, responsive, ethical, and committed, you can buy in this environment, in this market. Borrowers should care. Here's why it matters that the loan officer attrition is happening as a homeowner. Let's say you bought a house a few years ago. You had a loan officer you liked. They helped you close. Everything went well. Then life changes. Maybe you need to move because your family's growing. Maybe you're getting a divorce, or maybe you inherited a home, or maybe you're self-employed. Maybe you need to pay off some debts. Maybe you're looking to buy an investment property. You try to make that phone call to the loan officer that you liked, but the phone number's disconnected. They've retired. They've changed companies. They no longer originate or simply do not return your call. I will say you could go to the NMLS Consumer Access, put their name in, see if they're still licensed. You might be able to find them that way. That's the best way if you can't find them on the internet. But here's the thing. Now you're starting from scratch during an important financial decision. That is why every homeowner, every realtor should have a mortgage professional, someone you know, before you even have a problem, okay? Not someone who's going to pressure you into a loan, someone who will answer the phone, review your situation, explain your options, and actually tell you honestly. Before we continue, this video is sponsored by First Meridian Mortgage. Whether you're buying your first home or planning your next move or just looking to do a refinance, the first step is understanding what you can comfortably afford or what your refinance options might be. First Meridian Mortgage can help you get you pre-qualified or look to help you with your refinancing needs. Just schedule a personal one-on-one home buyer consultation either by phone or by Zoom. Scan the QR code. It'll take you to Let's Start a Conversation, and you can fill out the perfect home assessment. Fill out this form and we'll give you a call We'll schedule a time and we'll go through all your particular needs. My name is Kevin Retcher. Now let's get back into the conversation. What's the best decision for you? Why realtors should have a backup or a second or a third or fourth loan officer. Your clients do not just need a pre-approval letter. They need a mortgage professional who can execute when the deal is done, even when it gets complicated. You need someone who answers the phone on evenings and on the weekends. Someone who understands the differences between a difficult borrower and an impossible situation. Someone who can communicate clearly with the buyers, listing agents, title companies, and someone who is an advocate for your business. Someone that understands your business. Someone like myself, who is a licensed realtor, often has access to capabilities that most loan officers do not have. You need a backup plan, because if one of your trusted lenders retires, changes companies, slows down, leaves the business, maybe the rates just suck, you do not want to have to discover in the middle of your client's offer that you referred them to someone who just isn't up to snuff. You don't want to wait for that. Good referral partners do not wait for a crisis to build on their bench. When you're building your bench, you want to look for longevity, you want to look for experience, you want to look for someone such as myself that has never missed a closing date in your life. When you're interviewing that loan officer, understand how many times he's changed locations, phone numbers, how many years in the business, how often have you ever had a closing not go on time, and what did you do to solve that problem? But here's the thing, if you need a backup loan officer, now is the time to find them before you need them, right? First experience, ask whether they can handle more than one easy conventional loan. Someone like myself who's been ranked on the Scotsman's Guide for volume, you know just by that one fact that someone's on that Scotsman's Guide that they can handle the volume, because that's what it's based on. Do they educate you in plain English? Do they answer your phone? Do they call? Do they answer the phone on the weekend? Can they compare different loan structures, and do they have multiple lending sources? Here's the thing, a good mortgage professional should always be comfortable telling you this is not the right time for you. You do not need to refinance, you do not need to purchase, you should not buy in this price range. One of the first things I learned as a loan officer, and your loan officer should be comfortable telling you, is no. The first thing that comes out of my mouth is never yes. You have to prove to me that, one, you can afford the home and you understand what you're buying. The right person is not just there, the loan officer is just not there for one transaction. They should be there for the long term. Someone like myself and or the loan officer you're looking for should specialize in no closing cost refinances. Here's the thing, every realtor out there, when they close one of their clients, should actually know what interest rate and program their client took when they bought the house, and just not be looking at the closing disclosure at your commission. The reason for that is this. When you partner with those right loan officers and they do no-cost refis, it's a simple phone call to the loan officer as an agent and saying, hey, I think Joe might be eligible for a no-cost refi. What's your current rate? And like, boom, instantly, you can call your client and say, hey, Joe, call loan officer back because there's a no-cost refi potential that we can save some money, and you as the agent get to be the hero. Here's the thing. I think of it as a race. Sometimes I'll even call the agent and say, hey, do you want to call and tell them to give me a call? They're in the window. That loan officer just gave you an opportunity to make you look good as an agent. Or if you don't want to make that phone call, I'm going to make the call anyway to save the client money because that's my job. So with 24,600 fewer loan originators out there, one thing is clear. The business is getting tighter. Inventories have been tighter, and it's getting a lot harder. And the positive in that is the loan officers that are remaining should probably still be the more professional loan officers. That's the good news. The bad news is there's still a lot of loan officers out there that are hurting and looking to make more money than they should on a file. So one of the things I want to tell you lastly is just because you were referred to a loan officer by an agent, a friend, a family member, that loan officer should look at that referral just like any other piece of business and fight to get you the very best deal. What I see way too often is this, and it's one of my most frustrating things. When I'm competing against loan officers that work for a bank do not have to disclose how much money they make. So they do not go to bat for you as a consumer if they work for a bank unless there's competition. Here's the thing. Many cases, I help people get a quarter or 3/8 lower interest rate because that referral from the realtor was a referral that loan officer thinks he can make full price on and doesn't have to worry about competition. My frustrating thing is when, as a mortgage broker, I never make more than 1% on a mortgage. So I'm always competitive. So in some cases, clients find me but feel like they have some loyalty to the person who's screwing them because they took their first loan application. If that person, that loan officer, isn't willing to go to their boss to get you a better deal unless you found me, when you find me, you should fire them personally, okay? In the end, I'm happy that I help you get a better deal with that loan officer, and if you stay with them, please at least keep my number as the backup. In the end, I feel that the person that is willing to give you the best deal up front without a lot of haggling should earn it, even if he's the second player. But as a backup, keep him as a backup. In closing, I want to be your primary, but if you need a backup, I'm here. If you need a no-cost refi, you don't ever have to chase me down. My phone number hasn't changed for 30 years. I've been doing no-cost refis for 30 years. Like, share, and subscribe. My name is Kevin Retcher, owner of First Meridian Mortgage. Talk to you soon. This is the Till